good morning or good afternoon, depending on where you are today. This is Julie Andrews. I'm the Vice President of Brokerage here at LeClair Group, and we are so glad that you're joining us for Long-Term Care 101. Today's webinar is the first in our ongoing series designed to equip you with the tools and the support you need to increase your sales of long-term care solutions for your clients. Be sure to catch next week's webinar, Friday, May 6th, noon Eastern, when we cover more advanced long-term care planning and also feature Genworth's new solution, Element, coming available in May. A couple of housekeeping items to note before we get started. If you'd like to ask a question during the session, please submit your question on the question pane on your screen. There will be a Q&A session at the end of the presentation, and if time does not allow all questions to be answered, we will follow up with you offline. Today's webinar is being recorded, and we will make this available on the education page of the LeClairGroup.com website. Without further ado, it is my pleasure to introduce our presenter, Gary Marx, the Director of Long-Term Care Services here at LeClair Group. Gary has over 10 years of experience in long-term care sales, both with individuals and also employer groups. Gary?
Thank you, Julie. And I want to thank each and every one of you for attending this webinar. It's a very important topic, and I believe can help you generate additional revenue for your practice. As Julie indicated, I'm a long-term care specialist working with LeClair, and I just focus on long-term care protection. LeClair Group's mission is to help you help your clients. And throughout this discussion, we're going to point out ways that we work together with you. So let's start by reviewing the agenda. I'd like to talk about setting the stage with your client and how that discussion looks. I want to define long-term care coverage, sort of basic information. We'll review the components of a long-term care plan. We'll discuss, in summary, how LeClair Group will help and provide support services. And as Julie indicated, we'll leave room for some questions at the end. So let's talk about setting the stage. And what I mean by setting the stage is after your initial warm-up discussion, whether it be by phone, whether it be in person, in terms of just being introduced and settling in, really the initial discussion, the context for long-term care is really about planning and education. And it could go something like this. Mrs. Client, it's important that we have a discussion about long-term care planning. And our discussion may or may not include insurance. But it's important to talk about planning and for you to have an education about this issue in order to protect against the negative consequences, both financially and emotionally, that take place when a long-term care event occurs. Now, I'm talking to you as an agent, and every successful agent in long-term care needs to understand a couple things. One, you need to believe in the coverage. You may get asked if you have a policy. You may, after reviewing some of these issues, you may consider purchasing one. You also need to understand the needs that your clients are thinking about. So to help you towards this goal, here are 3 facts to consider. Number 1, there's a 70% chance the average person who reaches age 65 will need some form of long-term care support. Number 2, of the 78 million baby boomers, 28 million are expected to develop Alzheimer's or some other form of dementia. Now think about that. That's 1 in 3 baby boomers. Point 3, The number of adults in America caring for someone is on the rise. Nearly 40% of adults, and they are mostly female because females become the caregivers, are caring for someone with a significant health issues. So on the slide I have are a few questions to raise as part of your long-term care planning discussion. The first question, why do you think you need a long-term care plan? Why do you think you need to plan for long-term care? Now this is an open-ended question, and what it might develop into is information that you need. Have they looked at this before? Are they working with somebody? Has someone approached them? What have they seen on the internet? Have they had a family experience? These are all issues that will help you understand your client's needs and objectives. The second question, why would you not want long-term care coverage, is important because it'll help you see and hear their objections ahead of time and will help you be able to meet those objections as you educate and help your clients plan for this need. And finally, it's important for you to ask health questions and determine financial suitability for this coverage, just as you would with any other investment or planning type vehicle. As you may know, in long-term care today, 30% of all individual applications are declined because of health. So what we've developed and you'll be able to obtain is a template that will help you with health questions and some of the other information needed. Now let's define long-term care and start at the basics. So long-term care is any assistance and care for chronic illness or chronic disability. I want to focus here on caring versus curing. For all of you who have primary health insurance, or if you're 65 or over, Medicare becomes your primary health insurance typically. Primary health insurance, Medicare, however you obtain this through group plans, individually, through associations, designed to get you better, to improve your condition, treat acute care conditions. There is not coverage for any kind of ongoing extended care if you're not improving in your condition. If the diagnosis is such that there's no improvement that can take place, that there's no coverage. And if you look at those policies, it's pretty much stated within the policy. And I know everybody reads their policy cover to cover, right? You will see that unless there's ability to improve in one's condition, the policy will not provide reimbursement. So long-term care is more about the caring. It's the ongoing extended care, again, typically lasting more than 90 days. So that's the gap that long-term care fills, because there is no coverage with primary health insurance or Medicare. So long-term care is like an extension of one's health insurance or an extension of one's Medicare to provide the extended care. The types of long-term care can include skilled care, personal care, supervisory care. Skilled care is typically care provided by a licensed professional. We typically see for personal care, home health care aides, personal care attendants, occupational therapists, etc., helping with one's need for support with activities of daily living, which are typically listed here and typically what you do when you wake up in the morning. Supervisory care, we see more when an individual is in a skilled nursing facility because they need ongoing, consistent, and constant care. That's what we call supervisory care. Long-term care policies cover all areas once you meet the criteria that triggers a claim, which we'll discuss. Now, where is care provided? As you can see, in all of these environments, most care today is either home-based, assisted living, or adult daycare. Now, Everyone knows what home health care is. Everybody wants to stay at home if they need care. They're more comfortable. They're around family and friends. Adult daycare is a situation where a family member may drop somebody off at a community center, a daycare center, bring them home at night so they can be part of that family unit at night. Assisted living, we've seen the rise in beautiful assisted living facilities with many amenities. It's the fastest growing segment of long-term care. And nursing home care, actually stays in a nursing home are going down, less than 3 years today. So with new medical technology, you've seen new monitoring systems, you're only going to see the rise in the length of time people receive home care. Again, more than 14 million people now receiving long-term care services. And if you talk about long-term care, many people, if you're talking to someone younger, they think it's just what? For old people, or just for people in a nursing home. Well, the average age of the 14 million is 66, and 41% are working adults. Ski accidents, snowmobile accidents, automobile accidents, strokes, cancer, all can lead to a long-term care event. The risk of needing long-term care, we had mentioned, again, 70% of chance of people, once they reach age 65, needing some type of long-term care services. Now, all of you as advisors, investment planners, you do a great job in your planning for those types of situations, retirement planning. But arguably, long-term care need is the biggest risk your clients are going to face. So I believe it's incumbent upon you to at least educate, raise the issue. We can help you with those kinds of issues. We can help you with statistics. We can help you with carrier information. We can help you with marketplace discussions that you can relay to your client so that you have an advisor expertise available that is part of your team. There is a growing need for long-term care, and it has to do with an aging society. And you've read the articles, we're living longer, we're eating better, we're trying to take steps so that we stay healthy. Now, I want to focus here on families in transition. Obviously, there's more women in the workplace, so typically women will outlive their spouses. And if assets are spent down on the spouses for a long-term care need, it's a lifestyle, and that's this kind of discussion you have with a male, so that they want to protect the lifestyle and financial viability of their spouse if that is the situation. It's not like 50 years ago with generations taking care of generations within a single household. Kids are spread out. They may live in different states. Again, more women in the workforce. So having a policy or having a plan, not necessarily a policy, but a plan to be able to deal with these issues, negate the impact that a long-term care event has on a spouse or family member is really, really important. And you, as a financial advisor and planner, can help and bring out those issues. Now, it's expensive, and that's the big issue. In Minnesota, I'm using Minnesota as kind of an average in terms of cost for semi-private room, a little over $80,000. In some of the eastern states, it's more expensive as well. So the Genworth cost of care summary is a good tool for you to use. You could put it on your laptop. You can show it because it'll divide by state, by local region, show costs for everything from home health care aides to skilled nursing facilities. Costs outside of nursing home are also expensive. If you think of an 8-hour shift, you look at annual costs, and these are average costs. These are if there's a particular physical disability that requires more consistent care, or if there's a different situation that can lead to higher costs, these are average costs. Again, assisted living, about 70% of the cost of skilled nursing facility. So who pays for long-term care services? Now, in a recent survey, 54% of baby boomers thought that Medicare or their primary health insurance would cover this risk. So let's see if this is correct. As you know, Medicare, once you reach age 65, becomes generally your primary health insurance. There's no eligibility or financial requirements of economic status. It covers acute care condition. Again, it's designed to get you better. It's designed to improve your condition. So the average stay with Medicare across the nation is around 24 days. You have to jump through some hoops to get the 100-day benefit for skilled care that Medicare provides. You have to be in the hospital for 3 nights. You have to be admitted to the skilled facility within 30 days for the same condition. So since many of you may have witnessed this with family or friends or heard about with your clients. Again, Medicare was never designed for long-term care risk. What about Medicaid? Well, yes, Medicaid is the only government program. It's a joint federal state program that will cover the cost of care in a skilled nursing facility. However, when I look at Medicaid and the last 3 letters, AID, I define that as all investments depleted. So all investments depleted, in each state has maybe some different rules, but generally you basically have to impoverish yourself to qualify for Medicaid. You have to spend down based on state requirements. Now, in 2005, with the Deficit Reduction Act in that year, they made it more difficult to transfer assets, hide assets, looking back now 5 years from the date of application for Medicaid. Again, I don't think most people plan on going on Medicaid. Typically what happens is they haven't put a plan together. No one's talked to them about planning. No one's talked to them about this risk. So a long-term care event occurs, they start spending down their own assets. They have no options. So having a discussion with them, using us to help you understand some of the points of that discussion, you're doing a really good service for your clients. So why is planning necessary? Again, high likelihood of needing care, the high cost of needing care, the other health care plan limitations. Again, primary health insurance, Medicare is not designed for long-term care. The risk of depleting all retirement assets. So everything that your clients have worked for is at risk here. There's several options for paying for long-term care, and that's it. There's really 4 options. You could pay the cost yourself, self-insure. There's nothing wrong with self-insuring, as long as you understand what that means. That means that someone in the family, whether it be a spouse or family member, still has to coordinate services, find the right people, do the background checks, coordinate with all the medical services, make sure that all medical records are complete. It's a big full-time job. That's aside from being a direct caregiver with all the dignity issues there. So it's one thing for a family member to manage care. It's another thing to be a direct caregiver. So be careful with self-insuring. You could rely on Medicare. You could have your applicant rely on Medicaid. Again, I don't see Medicaid as really a viable option. You don't know where you're going to be. You may not be near family or friends. It's a public assistance program. It's for those who don't have any assets. And if you look at what's happening with public health care today, it's only going to get more crowded. Long-term care insurance is an option, or what we can help you with is a combination of self-insuring and long-term care coverage. And we do this a lot. And so working with us, we can talk about design, we can talk about sharing of risk, we can show you different examples of how that works based on the needs of your applicants. So let's talk about the 4 components of long-term care insurance. One is a daily or monthly benefit. How much are you going to be reimbursed for care? It could be designed daily or it could be designed monthly. Some carriers just offer a daily benefit. Some carriers just offer a monthly benefit. Now, monthly is typically preferred because if you exceed your daily benefit and you have 2 or more services in a day, well, that for your applicant, that's out of their pocket. However, if you have a monthly benefit, you could take from that monthly pool. So it gives applicants more flexibility because many times care at home starts initially, it's intermittent. They may not have a service every day. The second component is plan duration. For how long is it estimated the plan will last? Now, remember, the way these plans work is you're not limited by time. There's no time limit. It's what's left of that lifetime maximum. So, for example, if you had a design that reimbursed your clients $5,000 a month in today's dollars for 5 years, so that's $60,000 a year times 5, so that's $300,000 initially, day one, your clients would have available. Now, out of that lifetime maximum, they're going to be reimbursed up to a maximum of $5,000 a month. In 1 month, let's say only $3,000 was used. Well, the remainder stays with that lifetime maximum. You don't lose that. You're not limited by time. It could take someone 10, 20 years to exhaust that maximum. So again, there's no time limit on exhausting your benefit. Waiting period is the third component. It could be 30, 60, 90, 180 day, depending on the carrier, have different options. Now, 90 days is used a lot. Again, this is a way to also self-insure. The greater the waiting period, where your clients are paying first before the policy kicks in, the less the annual premium. Now, 90 days, again, Medicare covers 100 days, so they may pick up, depending on the situation, part of that waiting period. And then finally, inflation protection. Carriers have various options you can choose from, or you could delay it and have your clients take inflation protection down the road. It just depends on the needs and situation of your clients. So, what does it cost? That's what your clients initially ask you. What does it cost? And this is what you're going to say. It all depends. Price premium based on age and health at the time you apply. Now remember, with health, 30% are declined in today's underwriting world with long-term care. So you want to help qualify as best you can, and we will be able to provide you a template with some health questions to ask, some key questions to get out up front, as well as a profile, all within a couple pages. You will have access to that. So age and health, plan design is the key. You can have a plan that costs $50 a month all the way up to $500 a month or more. It just depends on risk, a tolerance, your discussions about planning, your understanding of their goals and objectives, as you would do with any of your financial advising, financial planning. It's the same. And then There's discounts available depending on good health as well as marital status that would apply. All right, so how do we know an insurance carrier is going to pay a claim? This is an IRS rules. These are tax qualified plans. So any reimbursement your applicants receive is not taxable income. To meet that criteria, the carriers all have the same criteria based on IRS regulations. Either one or both of your clients can't meet at least a minimum of 2 out of the 6 activities of daily living. Again, typically what you do when you wake up in the morning. Or they have a cognitive impairment, and the standard is it's not safe for your policyholder to be alone or to be with others because they may cause harm to themselves or others. I mean, you see the articles and newspaper clippings of people wandering away. Cognitive impairment, Alzheimer's or dementia, or other form of memory loss. Now, in your discussions with your client, you want to encourage them to have a relationship with a doctor. Certainly as they get older, a licensed professional is going to certify that the care is going to last at least 90 days. Again, not short-term acute care. That's primary health insurance or Medicare, depending on age. But this is ongoing extended care. So in summary, how can LeClair Group help you? We can help you with that initial discussion. We can help you with sales coaching ideas, prospecting ideas, referral-based ideas. You get many referrals from clients you are working with if you take this approach to having a discussion about planning, having enough knowledge to be able to educate, working with us in terms of providing education so that your clients understand the coverage and how it helps to meet their objectives. We can help you with plan design. If you have questions, we can maybe discuss various designs depending on carrier value, and what every carrier has different idiosyncrasies on plan design. We can sort them out for you so you can provide sort of the best value for your clients. We can help you with product expertise. We represent major carriers. We can help sift through the pros and cons as you narrow down the type of design that would be appropriate for your client. We encourage you to have the initial discussion first. Have a discussion about planning, education, and what their goals and objectives are. After that summary discussion, you have a much better understanding. We work through plan design. You're ready to present an illustration which we will design for you. So there's many roles we can play, and it's up to you to take advantage of that expertise. So at this point, what I'd like to do is open it up for questions. You can go on that chat question panel and submit questions if you have. Well, I see a question about whether a plan can be tax qualified if there's no inflation protection. And yes, it can be tax qualified. It really depends on age, and as long as it meets some minimum requirements per state, it could be tax qualified. The discussion of no inflation really goes to whether the plan is a partnership plan, and many states are now what we call partnership states. In our May 6th webinar, we're going to do some advanced planning, sales tips and techniques. We'll talk about partnership programs then. Oh, and there's another question about whether this presentation will be recorded, and yes, it will be recorded and available to you that way as well. So finally, You will find a long-term care profile template that I mentioned available in the handouts panel on your screen. This includes the knockout questions that you want to make sure you discuss ahead of time so you're aware early in the process if there's any major health issues. So you don't want to put your client through an application when knowing that they are going to be declined. So with that, we would like to thank you for your participation. We look forward to working with you. Take care.